Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Well, good morning, folks. Got to remember what to do, which buttons to press, but hey, welcome back to 2024. Anyway, welcome back to me. Probably many of you are already back at work. If that's the case, then well done, keeping the country running. But this is my first kickoff for 2024 Wealth Coffee Chats, back on the air at 8:10 in the morning. Welcome, folks. Good to see you here. A few of the early birds up and at it. Fritz, hey, we got to catch up, Fritz. I know that you and I need to have a meeting. So good to see you here. If you're hanging around, give us a shout out in the chat. I hope your holidays were okay. I survived a tornado here in southeast Queensland. So did a few other people. That was interesting, exciting times. But hey, listen, let's get into it this morning because we've got a very special guest with us this morning. First kickoff, bring out the big guns tonight. Our first mentoring of the year as well. So we're kicking off the year with a bang with Dr. Andrew Wilson. I'm going to bring him on in a minute. But what's 2024 got in store for us, folks? 23 was an interesting year. I think I've been saying things that are interesting for 3 or 4 years in a row. Maybe it's an interesting decade. Who knows? But, certainly some interesting headlines that I saw over the holidays. A few things popped up. So I thought I'd sort of kick off with those and then get Dr. Andrew on in a second, maybe just to tell us about his thoughts about where we're at and what's on for tonight at mentoring. But the big one, and it's always interesting, I should have gone and checked this one, but, population panic. I love these headlines. The old media loves a little bit of, clickbait headlines, but, population panic, 27 million population 18 years early. And certainly in the world of property investing or property management, many of you have our team manage your properties. Those rents are rising and the vacancy rates are low, still low across the country in the 1% in most places, sometimes even under 1% vacancy rate. Now, that's kind of like we're settling into a normal, but that's certainly absolutely not normal, folks. The population's growing. It's not slowing down. The government's pretty keen to get enough people into the country. There's plenty going on. There's a few dimensions to that, but this little graph here, I'm quite interested in. I don't know if you guys can see this. Get my little pencil going. All of our supply metrics when it comes to the world of real estate approvals, completions, commencements, heading in a largely downward direction, and then the population heading in a absolutely insanely spiking direction. Now, that may not be sustainable for the long term, but in the medium term, short and medium, that's going to be there like that. And if you look back to 1987, we haven't experienced that type of upside downness before with population and supply issues. So, and last but not least, in that sort of conversation for me is that who's going to get out there and build some of our properties when construction companies in the real estate game certainly have been falling like flies. So anyway, there's just a couple of things to wet your whistle, get you thinking this morning, and maybe even give Dr. Andrew a few little subjects to talk about. But let's welcome him on this morning and get him up and have a quick chat. Dr. Andrew, welcome to the show.
Yeah, good day, Jason. Happy New Year, and Happy New Year to everybody, and great to be back here again.
Fantastic to have you. Yeah, tonight we're going to do our full mentoring, and we're looking forward to the full lowdown or the update. But what are you seeing out there? What's on the agenda for this evening, and what's the sort of, a little bit of headlines for tonight to get us excited?
Well, look, obviously, Jason, the first is the year that was, 2023. Let's have a look at what was a fabulous year, really, for the housing market. And in the context of what was so much negativity to begin 2023, I'm not sure those forecasters who predicted, 10, 20, 30% falls in house prices, in their shame, have disappeared. They'll be back. They're always back. They were there during COVID. They've always been there. And they always seem to get it wrong, don't they? They got it wrong big time last year, and that's what we'll look at, just how strong the markets were last year, and the reasons behind it, Jason. I think that's important to understand. There's, those that did get it wrong have been, fishing around, thrashing around, looking for reasons to justify their mistakes. It was a surprise. Yeah, well, not to everybody, was it? Not to us, but. I was interested in that chart that you showed at the beginning of the show. And a lot of these analysts, where that chart I think is derived from, they're part of the story in terms of thrashing around looking for a reason why we bounce back. And migration is the easy go-to solution. Well, it's not the reason that we had such a strong year last year. Migration, high levels of migration are certainly a lagged impact. Not everybody's going out buying in the eastern suburbs of Melbourne or the lower north when they come here to live for the first time. So that's a bit of nonsense, and yet those markets were very, very strong. But look, it's an easy excuse, an easy reason to justify why experts, so-called experts, got it wrong. But I think it's interesting, and we've been saying for quite some time that we've undersupplied our housing markets now for the best part of a decade.
Yeah,
there's systemic reasons for that. It's nothing that's come out of the blue. It's just over time we've really restricted the capacity to build new homes in this country. And finally, it's caught up with us. And the issues over COVID with lockdown, firstly, which was supposed to result in a collapse in house prices. Well, they didn't. It actually resulted in a boom. But that's exacerbated because following closed borders, of course, we've opened our borders up. So we've come with a rush, big numbers, 500,000 coming into Australia. And, there's the reason for our house price boom, right, or home price boom. Well, as I said, that's nonsense because most of those migrants haven't driven markets where they've been their strongest.
Yeah.
But I think it's interesting when we see that 500,000 and the government's sort of thrashing around looking for some solutions because they're under political pressure. As you mentioned, those skyrocketing rents, something's got to be done about it. Well, I don't think anything can be done about it, in my opinion. But they're going to restrict temporary migrants into Australia. And that means, because that's where the bulk of the change has come, not in full-time or permanent migrants, but in temporary migrants. And it's really easy to sort of understand why, because we closed our borders for 2 or 3 years. And by temporary visas, we're talking about students.
Students mainly, is it? Yeah.
Yeah, and that's what they're going to cut down on, which isn't good news for a big sector of our economy, which is higher ed. But of course, we're getting a big number of temporary student visas because we're getting the inflow that we normally get, but we're not getting the outflow because nobody's qualified over the last 3 years because nobody came in to study in Australia. So they're not graduating and leaving. So it's all a positive, and we're not being balanced by those leaving once they've got their qualification. So this is a short-term scenario. This is a short-term issue because eventually those that are coming in will graduate, they will move out, and we'll get back to our normal net result for temporary visas. But it's just a bit of a thought bubble, a knee-jerk reaction, but it shows how desperate our government is to try to rebalance what is a terribly undersupplied housing market at the moment. But this is COVID for you. And as you said about the prospects, and that's what we'll discuss also tonight, this year are that we've sort of lost all that up and down energy that's been created over the last few years through lockdowns, higher interest rates, and we're starting to settle. So the question is, will we, and the prospects are good that we'll have a much steadier, more settled year this year, because we've worked through all those ups and downs created by COVID and higher interest rates. But will something come out of left field to change all that again? Let's hope not, because I think we've been waiting for a more, predictable, more subdued, not subdued, but certainly predictable housing cycle going forward. But no doubt the big problem is we don't have enough homes to not just cover the migrants, but to cover everybody, really.
Yeah, and no matter which way, I've had a look at it. Sam and I talk about this all the time. Has the government got some magic trick up their sleeve, throw money or whatever at it, and it doesn't matter what they're going to do, no matter who will ask, it's almost an impossible task. So, how do we as property investors and, manage ourselves over this next 3, 5, maybe even 10 years before this, gets its balance back in the marketplace?
Well, will it get its balance back? I think the only thing that'll shift is a significant economic downturn, and that's, we're still in the reverse of that. Very strong economy, one of the strongest labour markets in our history still. So, we've just got to start building more houses, and to be quite honest, that's almost mission impossible. We have these issues of planning restrictions, green tape, red tape. Now we have high house building costs, which have added to that negative, those negative outcomes in terms of trying to match supply and demand. But I do think quite clearly this is tremendous motivation to be a homeowner or a home investor, because it's just the old law of supply and demand that with so much demand over supply, it's only going to mean higher prices and higher rents, notwithstanding the economy and incomes growth. But at the end of the day, it's just really shifting any argument about the security of home ownership and home investment well and truly in favour of security, because we just don't have enough homes to go around, and the government's not going to build them. It's the private sector that will build them, and the proposals the government have come up with, build to rent, etc., will only just nibble at the edges of the problem.
A small percentage, I think I saw, like 1 to 3% of the supply chain.
That's right.
So,
hang on, and as I said, what incentive this is surely for home ownership and home investment. And as you mentioned, we've had, we'll look at what happened with rents last year. Crazy story, plus 20% growth in unit rents in most capitals, and plus 15% for house rents increases in most capitals. And you mentioned the vacancy rates. Well, we have vacancy rates for houses below 1% in every capital city except Canberra, which is at 1%. And it's only Melbourne and Sydney where unit vacancy rates are a bit above 1%, which are different. And that's, sort of closing fast. And I think what's happening in the rental market is we're starting to see shifts in demand patterns. People can't find somewhere to rent. So what do? They find something smaller, a different type of property. They move, to a regional area. But this is a real challenge for those, that aren't homeowners, to secure, suitable accommodation. And it's not just Australia that's having this problem, Jason. We're seeing it in Western Europe. We're seeing it in the US. We're just across the board, rents are skyrocketing, and it's having political consequences, in those other jurisdictions. And I think the government's quite aware of that. It's now moving into an election cycle. So it's going to have to be seen, not just to be seen to be doing something, but to be producing some solutions. And I don't envy their task, to be quite honest.
Difficult one. Yeah, absolutely. What's the thoughts? We've had 12, 13 interest rate rises in a row, that's the big one on most people's minds, when it comes to home ownership. If you're owner occupier like crikey, this is the highest interest rates I've paid forever. Is the sniff that, we might have some reductions this year, or it's just as steady as she goes?
Well, I think that the Reserve Bank's been fortunate. I think they made a couple of blues last year. They went into pause mode a bit too early, but maybe circumstances will favour them. I think certainly the outlook now, with inflation continuing to fall, still a strong economy, but we've just seen unemployment ticking up a little bit, still very low. But the Reserve Bank would be happy to see slightly higher unemployment, and of course, high numbers of migrants are adding to that, and that's fine. So I think the outlook is for steady rates this year. The real issue with inflation has been, when you look at it closely, the price of oil. Really, inflation has tracked backwards with oil. As it's fallen, so has inflation falling. It sort of begs the question, did we ever need to raise interest rates in the first place? We just had to wait for oil to fall, which it has, and inflation is falling. But there's still a task ahead of Australia. Its inflation rate is around about 1% or more higher than the US, and yet our interest rates are lower than the US. So there's a story there. But I think circumstances may favour the Reserve Bank in the sense that we don't have to go as high as the US has gone with their interest rates. And I think that the outlook certainly at the moment is steady as she goes. And let's remember, Jason, interest rates are still around about 1% below where they were at their previous peak in 2011. And we did start at zero, so we couldn't sort of start anywhere lower than that. And hey, we had 13 interest rate increases through 22 and 23, and house prices increased 10%. So I'm not sure that sort of holds, but certainly you're right that, steady interest rates will be welcomed by mortgage holders going forward. I really think, you spoke about clickbait before, but discussions about interest rate cuts are a little bit too premature at this stage. It's, I think it's been driven by markets that want to see, looking for a margin in terms of changes in rates. But I think, we'll stay where we are for some time. But of course, as I mentioned before, it depends on oil. We don't want those issues in the Middle East working their way into higher oil prices, because that will then, certainly on the trends, it'll push inflation up again and may mean higher interest rates, particularly for Australia, which has kept their rates lower than certainly the US and other similar advanced economies.
Yeah, well, listen, we're going to dive deeper into that tonight. I know you've got some data, which we love data.
So much data. Too much data, but anyway, we'll manage.
We've all got our popcorn and lemonade or whatever we've got lined up for this evening, Dr. Andrew. So appreciate you joining me this morning, giving us a little bit of an insight on what's going to happen tonight. But looking forward to the full update and debrief for this evening at our mentoring, folks.
Thanks, Jason. I'm looking forward to it very much as well.
See you tonight.
See you, mate.
Thanks, Dr. Andrew. All right, folks. Well, there you go. We've got the preview. The heads up on what's going to happen tonight, but I'm sure there's going to be a lot more. What do you reckon? Chuck it in the chat for me. What do you think that 2024? Try and get that one out. Not quite in the flow of things yet. 2024 has got in store for us. Property prices going up, rents going up. For you as a property investor, where are we? What are we doing? Good questions. I'm coming out of my Christmas slumber and starting to pontificate which way the market's going to go. But the best of the best, Dr. Andrew is going to give us all the insights on that tonight. So looking forward to that, that's for sure. Great to have you here with me this morning, folks. And spread the news. Let everybody know. Tell the world. Anyway, just tell everyone at Mentoring. We're back at it. 8:10 each weekday morning for Wealth Coffee Chats. This year, folks, we're going to bring out our 6-star team experts often. Finance, property management, property deals team, accounting, you name it. We're going to have them come and host a Wealth Coffee Chat, and you guys can pick their brains, ask some questions, find out what's going on from each of the experts. So I'm looking forward to that this year. Hopefully, it adds value to the Wealth Coffee Chat show. But great to have you here this morning, Chris. G'day, mate. Thanks for joining. Fritz, as I said before, Kevin's always up and at it. Thanks for joining us, Kevin. Evening for you over there in Florida. Brendan, good to have you back. Thanks, mate. Combed my hair today and had a shave. Feeling like I mean business. Anyway, there you go. All right, folks, that's it from me. Wealth Coffee Chat done and dusted. Good to have you here. Thanks for joining. See you guys tonight. Make sure you're there for mentoring and join me again tomorrow for another one. 10 past 8. You guys know the drill. All right, folks, that's it from me. Adios. Bye-bye.